Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Today I think we could take a look at the Great British Pound, because on the euro currency, as you can see, mostly everything stands the same. So if you remember, we talked about the reaching of the COP target on the euro market. After minor retracement, as we discussed yesterday, is continuing downward action. So we are still watching for reaching 109.80 area here, the COP target. So this scenario mostly stands the same. While we are waiting for result here on the euro, I think that we could take a look at the cable, just because we haven't taken a look at it for a few weeks. And this is reasonable because market mostly stands in a very tight range. Everybody understands the reason that just market waits for news from the United Kingdom. So this is the elections in December. This is some agreement of the contract of the Brexit conditions with the European Union and other things. So while market is waiting, it's logical that it turns to some tight consolidation. And currently we will take a look what really could happen here from the technical point of view. The reason why I decide to make an analysis on the Great British Pound is a bit specific and a bit tricky moment here exists. At the first glance, when you're just watching on this market, you suggest that, well, it looks a bit bearish because market stands flat. We have here's probably some divergence even exists. We have two bearish grabbers right at top. At first glance, it looks obvious that market will drop here, taking out of these lows, and maybe will show deeper retracement. So also we could recognize a kind of the AB gold city pattern inside of this flag consolidation. But at the same time, guys, when you're taking more closely on this situation, you start to see some details that could tell you that maybe this is wrong view, and you will be a bit surprised maybe with the pattern that we will discuss today. What first signs that makes me think that situation could be different and market could continue upward action? This sign is balance between the rally and the consolidation. So take a look. The rally was actually lasting for 1, 2, 3, 4, 5, 6, 7 days to the upside. And take a look how long this consolidation stands. At least 3 times greater. At the same time, with this retracement down and the 1 to 3 ratio of the time, market wasn't able to reach even minor nearest 30% support area. So market stands very tight right at top. If you'll take a look at the weekly chart, it could be seen even better. So take a look. This is our weekly rally. Market hits the weekly overbought, and then it stands just flat without any significant pullback. This is bullish sign, guys. Second moment that attracted my attention is that take a look that actually the standing was overall action is above the confluence, not below the confluence, not market just challenging, failing the breaking, but it already has broken and market stands upon it. When the market after breakout shows the sideways action across this broken level but above the broken resistance, this is bullish sign. It's very often happens, especially this on stock market. It very often happens and on intraday charts. And the market usually breaking the some on the major level, just creeping across of it, showing no significant retracement, then showing another leg up. So that's very typical for the stock market. On the forex market, it happens not quite rare, but still, it's not every time we see this action. But now, as you can see here, we have it. That makes me think and put me to conclusion that we could get some upward continuation pattern. Yes, of course, flag as itself could be the upward continuation pattern, but not just flag. Now let's take a look at the follow time frame chart. You will understand everything. Take a look what we have on the 4-hour time frame chart. I suggest that this could be reverse head and shoulders on top. Well, headstand 127 extension of the left shoulder. Now market hits the neckline, starting downward action. With this downward action, market is forming ABCD pattern and XOP stands approximately 28 or 9. That should be potentially the left shoulder where market could form it. And that will be simultaneously a very important vital level. If market will fail to hold above 28 area, it will mean at least that we are going to confluence 2740 area to be precisely on the numbers, at least. Ultimately, it could be downward breakout and downward continuation. So, if everything will still remain positive and market will keep action inside the flag, forming just the ABCD right to the confluence, in this case, this will be another continuation pattern. This market directly will turn to the flag consolidation, reaching of the bottom of the flag around 2740. By the way, it could start upward action. Ultimately, if something will go wrong or some bad news will come from United Kingdom, this could be the breakout. So this level is mostly important not to the bullish scenario at all, because we have another setup which also bullish, that based on the flag itself. But it is important only for the scenario that relates to hand and shoulders, because this is the bottom of the shoulder should be. And that what we will be watching for within the 1-2 sessions probably. If you'll take a look in detail on this butterfly and ABCD pattern on the hourly chart, you will see here is more scaled picture, and take a look at that difference between the butterfly target and XOP, just 10 pips, 127.98, 128 or 9 or 128.10. So we could use just 128 level, some middle between these targets. So, and I suggest that indeed this could happen, this market could turn the upward action right from here. Here is also, you can see on the MACD indicator some kind of the hidden divergence, because here we have the higher lows, but here we do not have the low yet, the final low. But still you can see some divergence already stands on the market. So that's the scenario I think that could be interesting, and at least you could consider it depending on your plans, on trading plans on the Great British Pound. So if you intend to go long, you could suggest both patterns, and take into consideration both patterns as these head and shoulders, as potential ABCD, and taking position around the confluence support. At least that some things that you could think about and make the decision. For the bears, I suppose it's not time to act and take the position, because purely bearish context will be set if market will break the flag pattern to the downside, which means that it has to break through the confluence support of the 27 area. In this case, yes, we could suggest that maybe downward continuation will happen. So that's things that we will keep an eye on the Great British Pound till the end of the week probably, and let's see what will happen.